Hey guys, welcome to another video brought to you by Total Control Traders. Today, we're going to be talking about the top lessons I learned as a full-time trader on my first year. And don't get me wrong, there is lots of lessons to be learned, way more than 5 lessons, but today we're going to highlight the first 5, the most important lessons I learned during my first year as a full-time day trader. Alright, let's get right into it. First, don't set daily, weekly, or monthly goals. And the reason for that, it may sound absurd for most of you who aren't in trading or who are just starting out to trade, or those of you who are working 9 to 5. It's hard to get around that thinking, especially coming from a banking, finance background. It is extremely hard to change that mindset of not having daily, weekly, and monthly goals. However, when you do so, if you were to set that daily, weekly, or monthly goals, what you're doing is essentially putting pressure on yourself. And remember, this is not a 9 to 5 job. So if you were to set those goals, all you're doing is putting pressure on yourself. And when you're putting pressure on yourself in a trading environment, as a full-time trader, all you're doing is you're going to be trading on emotions. And we all know from all the previous videos I've made, trading based on emotions is highly likely to lead to losses. Second, understand where you are emotionally. Do not trade based off of emotion. You need to understand whether if you are in euphoria mode, if you are in revenge mode, if you're trading on tilt, stop. All you can do trading on tilt is likely to lose more money. Know where you are emotionally, know where you are financially, understand your place, be humbled. Or else the market will humble you. Third, take some time off after a big win. And this circles back to the euphoria. After a big win, you are likely to be experiencing an euphoria emotion, and from there you will be sizing up. You are likely to be thinking that you've got this. Trading is easy. And no, it's not. Market will humble you very quickly. Take some time off, enjoy those gains, treat your girlfriend out, take your wife out, treat yourself to a nice dinner, buy something that you enjoy. It's better to spend what you have worked hard for instead of going right back to it and let greed determine your trades. It is very crucial to take some time off, enjoy it, let your mind rest, let your body rest, work out, whatever relaxes you. Come back refreshed with the same mindset, with the same way you scout charts versus going right back into it after a big win. You'll be trading here, you'll be buying that, you'll be looking at all sorts of setup. Now you have all these cash that you didn't have before. You are a whole lot more likely to take a bunch of trades that you wouldn't have before. Let your new account balance set in. Fourth, mind your sizing based on where the market is. Now this one is much harder than it sounds. Knowing your sizing, knowing what tickers you're picking up on, knowing what you're going into. Before you go in, knowing what sizes you're going to go into. If the market is full bull, as we have seen through November to February, that is the time that you size up on. That is the time that you go all in. It's okay to buy into momentum. Play with the trend until it ends. Patience pays. Make those easy money. If the market is reverse, it is in a bear trend, be very careful on your sizing. If you have $10,000 in your account, set a goal of only trading up to maybe 3,000, maybe 2,000, size down. Unless you're trading with a trend, you're playing bear. Know where the market is. Don't always be going in 100% on multiple trades. All that's going to lead to is blowing up of your account or big losses. And last but not least, it's okay to not trade. Wait for the right setup. Setups matter. If you can't find a setup that you like, wait for it. And for those of you that haven't seen my trading setup, that is the exact reason why I have the poster of patience. And in the subtext, it says, wait for the right catch. You don't have to catch everything. You just have to catch that 3, 2, or even just one single trade in that 1 year. And it will make your account. If you find that right setup, trade with conviction. Trust your technical analysis. Trust your research. Don't let the news or the environment or the noise outside of whatever you're using, whether it's technicals or fundamentals, don't let the news or the outside noise deter you. Trade with conviction. However, that does not mean to stay stubborn. If the chart does not go the way you're anticipating, exit. The successful traders, they let their winning trades run. They cut their losses fast. And that is how to be a successful trader. And just as an example of how those lessons are learned, I will show you guys the lessons that I paid to be remembered. I don't know if I would recommend doing this for everyone out there. As you look back at the losses that you have made, it sort of puts your emotions on a different level as well. It will make you think back, okay, I have lost, in my example, $19,900. Call it $20,000. When you look back at this, the purpose is not to track the dollar amount. The purpose is to track what you have learned, what lessons were learned throughout these trades. For me, when I first started, within that first 3.5 months, the lessons that I paid to learn, the tuition fee that I paid were $20,000. $20,000. And if we were to look at it, to drill down, the first one, 1,800 loss. Don't buy close expiry. Now, this is when I first started dabbling in options. And as you're going to see, most of these losses were learning how to trade options. Now, next loss, commissions. I was buying too many contracts, too many cheap contracts. So remember, the purpose of these are to track what you're learning. From there, sort of getting an idea of how options work. Next, big loss, 7,300 on one single trade. And that is trying to front run a reversal. And that's why I emphasize so much that it's okay to be late to a trade. It's okay to be buying back higher. You want to be trading with the trend. And this is partially from staying stubborn as well, as we can see here, staying wrong. And then from there, next one is greed plus revenge trade. This one was going back to a trade, a winning trade, too soon. Then from there, wanting to make that loss back with a revenge trade. Then again, staying wrong. And that's why you want to cut your losses short. As soon as the chart does not go your way, once your thesis is invalidated, get out. Take that loss. It's better to take that loss sooner than take that bigger loss later. Then the next one, order entry matters. Then greed. Do not let greed dictate your trade. Do not let emotions dictate your trade. Then again, third and fourth lesson of staying wrong. So I can tell you for sure, nowadays, I am not stubborn. Do not let your trades stay wrong. Once your thesis is invalidated, there is no point in that trade anymore. And remember that. Last but not least, kind of hard to scroll down here, rushing back in. And that is why I emphasize on trading based off of pivots instead of basing off of RSI, MACD, or just indicators itself. Wait for the divergences, wait for the volume, wait for the breakout. It's okay to be late. You don't want to be early. Once you're out of a trade that has made you money, don't rush back in. Unless, of course, you see that the trend continues. Then it's okay to buy back in higher. Know the differences. All right, and now to circle back to the top 5 lessons learned. Let's go into a little bit more detail on them. First one, coming from a 9-to-5 job, I was so set in my way to make daily, weekly, and monthly goals. Basically, that's what the banks do to all their employees. They drill that method into your head. In order for you to meet your quarterly goals, you want to drill it down to monthly, weekly, and then daily. Then you know from there what you should be doing daily. If you didn't accomplish it today, that means tomorrow you will have double that goal. If you doubled your goal today, that means the rest of your day tomorrow, for today and tomorrow, will be a lot more slack. But that cannot be the same thinking for day traders. If you're making a daily, weekly, or monthly goal for yourself, you're putting a lot of stress on yourself when you don't meet that goal for that day, for that week, or for that month. And you need to understand what is extremely important is all you need in 1 year is one single trade. And by one single trade, I don't mean actually putting all your money in one basket, in one egg, at one go. It would be, you enter 50% or 25% of your account sizing into, say, Tesla before the S&P uplisting. That's the best example that I can think of. The most recent, biggest pop. Then from there, as you get confirmation, you put another 50% in. Then as you get continuation, you put the rest of your 25% in. That is considered one single trade from one single ticker. Because even though you have 3 entries, it is one trade based off of the same thesis. All you need is one trade in 1 year, maybe even 2 years. You do not need to be trading every day. You do not need to be trading every week. So don't set that goal for yourself to stress yourself out on that daily goal, weekly goal, and monthly goal. Set a yearly goal instead. Yearly goal, much more relaxing. And if you don't make it, it's okay. You get a whole another year to make up for it. Second, understand where you are emotionally. Now, this is going to take a lot of practice. You would know when you're angry. You would know when you're sad. Maybe not so much, but you would know when you're happy. Recognizing that euphoria mode, recognizing that fear mode, recognizing that you are trading based off of FOMO or greed is a lot harder than you think. And my dog, Georgie, is visiting for our lessons learned. He has actually taught me another lesson. Relax. Chill. Spend time with those that you care. Georgie, say hi. Spend the time with those that you care. They will cheer you up. They will help you relax. It will help you get you out of euphoria and fear mode. Well, that's it for Georgie's visit. Manage those emotions. If you're trading too emotionally, step away. Go walk your dog. Go watch some TV. Read a book. Do anything but more trades. Understand that the more you trade based off of emotions, the higher likely that you're gonna lose, take bigger losses. So understand where you are standing emotionally before entering a trade. Is your foot on the ground? Are you sinking? Are you elevated? Know that before entering a trade. Make sure your foot is on solid ground before taking that trade. Third, take some time off after a big win. There's not too much more detail that we can go into with this one. I mean, it's pretty simple. If you're rushing back in, you are likely to give some profits back. So it's okay to take some time off. Enjoy it. It was well deserved. You have spent so much time doing your research and your trade had worked out. Go give yourself a pat on the back. Enjoy your profit. Buy something nice. Take some time off. Fourth, mind your sizing. Sizing is going to take some practice. You are going to need to divide up your account in the sense that, let's say you have 10,000. What are you trading with? What do you want to be trading with on each ticker? If you are used to trading multiple tickers, maybe 1,000 maximum per ticker. But if there's the right setup, maybe size that one up to 3,000. If you're used to trading 3 to 5 tickers only, then maybe 3,000 per ticker. And if you're comfortable with one ticker, do 5 to 7,000. It's going to take some practice, but it will do nothing but help you make those profits come to fruition. And lastly, it coincides with number 3. It's okay to not trade. Take some time off. Also coincides with number 1. You don't need to trade every day. Wait for that right setup. You don't see it, take a day off. Take 2 days off. You need to start seeing yourself as more of a person who's working based off of commission versus a person who's working based off of hourly. Just because you put more time in, it does not necessarily add up to the right amount of payback. You need to be making sure that you're trading the right setups, and that is what takes the most time. Once you find the right setups, the trade itself doesn't take much time. Just 3 to 5 clicks depending on what platform you're using. Maybe some keystrokes entering the amount of shares, what prices you want to buy at, but the trade itself does not take much time. It's okay to not trade. Wait for that right setup. Wait for the right catch. Alright guys, that's it for today's video. Thank you for watching. Hope you enjoy the content. If you're looking to get out of debt or build that first pot of gold, make sure to hit the like and subscribe button in order to get updates on our new videos daily. Also, check out our website at totalcontroltraders.com. We offer a 24/7 trading community with live chart updates intraday while the market is open. I hope you guys stay safe and be in control. Thanks for watching guys. I will see you guys in the next video.